Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend Podcast. Today is Friday, November 14th, 2025. S&P 500 currently sitting at 6772. I'm David Zarling here with Ian McMillan with a fresh beverage. Lots to cover this week.
I did have to grab a fresh beverage.
What do you got?
A lot to cover. I guess
What's
where we were last Friday.
What's your fresh beverage?
Cherry Coke.
Yes. Very nice. Very underrated.
Yeah, not as popular as it was like in the 90s. I feel like marketing hasn't been there. I think they had a better logo back then. Like, do you remember the red and black Cherry Coke logo?
Oh, yeah.
It's kind of like a Darth Maul vibe.
Okay. Going Star Wars. Like it. New Star Wars.
Yeah, like that's what the logo looked like. Anyways, yeah, I mean, we are where we were last Friday.
And last Friday, we said we were on some thin ice.
Bounced after the podcast? Was that during the podcast?
Bounced after the podcast recording.
Okay.
So we were on thin ice, retesting that level again this Friday. So maybe we're going to find out that the ice is thick there, not actually thin.
Oh, I like that.
Yeah, we'll see where we end up at the end of the day. But if we were to close where we are right now, near this 6770 level, having tested the 6550 level twice last Friday and this Friday, and hold that, maybe that's actually proof of buyers being there. We'll see.
I don't really want to test it at there. I hope we're not having the same conversation next Friday. You don't want to test it too many times. But that's good. That's good. And it could be thick ice. Be solid for some ice fishing.
Ah, yes. Yeah, well, and maybe speaking of that, are we going to go too many metaphors and analogies? But underneath the surface, there had been lack of fish, some breadth deterioration, and here you can make the argument that...
You think it's improving?
Well, I think some of the really aggressive names, whether it was like Bitcoin mining or AI stock.
Yeah, the quantum stuff got hit.
So some of that stuff catching down, or even the fact that you could argue your FANGs and your MAGs, your large cap tech, caught down to the weak breath, I think is maybe the fairest way to say it.
Okay.
And I'll go back to, we were not, because we've had weak breath from, I would say, mid-December. Like when you look at bullish percent flipping to O's, when you look at like percentage of stocks above a 50 or 200 day, you really start to see that deterioration in mid-September. And you saw tech go the opposite way. And now you're seeing that. When I say tech, I mean like semiconductors, large cap tech. Did that just catch down? And we're going to start to see a broadening out from here on out. I mean, time will tell. We can't say it on this episode whether that's the case or not, because you still have to see prior highs reclaimed before you could say that. But it is interesting paying attention to what's happened since mid-September with the under the surface weakness. Semiconductors and tech were still fine from that point through now, but like energy and healthcare, biotech stocks, pharma stocks holding up pretty good.
Yeah, biotech continues to be real nice. Another big candle. We'll probably have a few bullish engulfing candles today if this holds. But biotech, continues to definitely be a leader. I mean, really didn't flinch at all during October. And it made a big relative push over the course of October and into November, which is why the relative looks like today. So, I mean, probably a clue. Like we say, right, when the markets has like a red day and people are like, oh, look at what was green, which I think is super valid. I mean, when the market has a red month or a stupid month that's sideways and, lots of big swings, well, what's something that was steady and green? Definitely have to give biotech a nod there because it certainly has been pretty steady through all the noise, broad market noise.
Yeah, I think that's a fair.
Another one,
Fair
I
assessment.
think, I mean, I put it in that now it's, I guess biotech's been strong for a bit. Golly, it just takes so much to catch up on a relative basis. I could put solar in that category
Okay.
too. I mean, I mean, not that it doesn't have up and down days. I mean, I had red days in October, but again, I mean, I think pretty good October, especially. I mean, it was strong before that on a relative basis. Continued that through October, has continued that in. It got hit a little bit this week, but it's a strong. I mean, it's kind of one of those areas too where you're like, oh, biotech, oh, solar. Like, do I want to do this? They've held in there.
Well, and they're risk on areas, right? I don't think that those probably fall under the speculative risk on side of the spectrum of things. If you were to categorize things, I don't think you sit there and say, oh yeah, let's pile into biotech and solar stocks if the market's going to tank. We'll see though. I mean, I don't think we're out of the woods by any means. I mean, it'd be really nice to hold this, 6650, 6600 on the S&P to prove, which just happens to be the point of control since the tariff tantrums, by the way. But be really nice to hold this level to give us some more clear lines in the sand as far as where we're seeing buying showing up. And you think the tech and semiconductor thing is over? Is that done?
No, I hope not. No, I don't think it's done. I mean, it's still a good leader. XLK still. I mean, if you look at an SMA relative chart, it's actually like a perfect retest. I mean, you got to do it here, but I think it's fine. Definitely still like this. I mean, if you take an XSW, that never really got going. What's the other one you like? The other software, IGV.
IGV.
See, that never really got. So, I mean, I still put it in the mega cap, large cap category. I don't know, man.
You bring up you bring up a really good piece here, though. So IGV software,
Yeah,
weeks since mid-September, but man, is it at a really interesting spot right now, where if buyers prove themselves at this using IGV 106, 105, 106, right? We got the 200-day moving average. You've got the August lows. You have the November and February, November 2024, February 2025 highs. I could see software holding here.
What if like if these ETFs could hear us talking to them, hear the things we say?
I talk to them all the time.
Like, I gotta do this. Like, I gotta do this for my shareholders. We're at the 200-day. It's time. Like, it's time to really sack up and get going.
Yeah. Well, I talk to ETFs all the time. My wife's like, "Who are you talking to over there?" I'm just talking to IGV. Don't worry about it. You got to hold this. You got to hold this, buddy. You got to hold 105. But I do think your point is just how software's been weak. But even, I mean, you look at software versus semiconductors and where that's sitting. We're sitting at the June 24 lows, the May 2002 lows. When you look at IGV versus S&P, I mean, we're at the April 2025 lows. I mean, this is a logical area. I don't know if you meant to bring up software, but this is a logical area where you could see software regain traction, I would say.
You could see a lot of things.
You could, Ian. It is a market of stocks. We could see a lot of things happen. But
I
really,
see on the notes, speaking of tech semis, you have written down here, NVIDIA has earnings next week.
Yeah. I think
So
I'm going to sound dramatic, but I mean, one of the largest components in the world across various ETFs that I talk to. I mean, NVIDIA is the largest weighting in the S&P 500.
I will say this: if you or like your wife has been wanting to do something like nice, expensive, maybe she's wanted like to go out to a real nice dinner, do it this weekend. Don't wait till after NVIDIA That's what I would advise.
You're just saying the risk reward is the risk is too high.
If you gotta go out with a happy memory, do it this weekend because we could all blow up if Nvidia goes down.
Yeah, well, and it's all going to be about price reaction, right?
You don't have to tell her it's because of that. Just say, you know what, babe, I've been thinking about it, and you really want to check out this new steakhouse lately. We're going to do it this weekend, and she's going to love you. But in the back of your mind, you're kind of hedging your bets because if Nvidia blows up, you don't have to worry about her asking about the steakhouse going forward. You've already checked that box.
You're saying it's off the to-do list.
And if Nvidia doesn't blow up, okay, then dinner's basically been paid for. It's kind of a win-win mentally.
We should start a relationship podcast,
like a financial therapy, how to game your marriage via the stock market.
I did not think we would go there on the video, but I love it that we did.
I do think that. You should. Or any other big purchases? Don't buy a house, but anything. You're not going to want to do it next week if Nvidia is down 7%.
Yeah, but it's an important component.
Super,
and it's not going to be what the earnings are. It's just going to be what's the price reaction. And I will find it interesting because we've seen a lot of big tech names lately report their Q4 earnings with negative price responses.
Yeah.
So if Nvidia follows suit, likely is going to be really hard for the broad index like S&P, right? Your star quarterback on the team, if he's not performing, really going to be hard for the team to succeed overall. Same thing if we have Nvidia doing that. Now, also a scenario that could unfold. Great earnings, negative price response, gets the bears maxed out, super short, and that's when we base out and everything. It's the final flush. It's the final flush. We finally get a correction that's, greater than 3%. I should say since the tariff tantrum. Get a little bigger correction, really flush the hands out, paper hands, and then things move higher. That's a possibility.
What do you think about, I would say pretty polarizing dude. What do you think about Michael Burry closing up shop?
Yeah, Michael Burry, for those who don't know, the enigmatic hedge fund manager of Scion Capital, a main character in the movie The Big Short, which everybody loves to watch. And I feel like that's the only movie people have ever watched.
On finance, yeah.
On finance, which is lame because there's so many good ones.
No, I would even put, different type of movie, but I would put, it's my number one finance movie, but Trading Places.
Yep.
It's my favorite. Anyways, yeah. Famous, right? So he's, I guess famous bear. He's pretty negative. I would say a lot of his stuff gets turned, a lot of stuff around him that was just slop. Even recently they talked about his recent 13F and how
short he was on the video.
Yeah, how short he was, but it's not that's not true. Because normal people don't know how to actually look at a portfolio. And anyways,
but he's infamous for his housing short.
He's infamous for the housing short, yeah. So
he got his big payday, and he's been bearish on.
He's been bearish, yeah,
on AI and those things, and I totally get it. And now he closes his shop.
He's throwing in the towel.
Now I don't know if he's throwing in the towel personally, and my guess is he still has a bet on himself.
Yeah, I'm sure he still manages his own money.
But he removed the outside money equation from it. But yeah, anytime a notorious bear closes shop,
maybe he's starting. Yeah, and he said he was on the bigger and better things. I don't know.
But anytime a shop like that closes up, you just wonder, right? It's because bull market tops don't happen because you have a high quantity of people shorting. In fact, that's just future fuel. It's when you run out of buying. Because put buying, all that is future long buying of stocks, just stacked firewood. And when you remove the pile of firewood, it removes buyers. And that's really how bull markets end. is lack of buyers, buyer exhaustion. Is Scion closing a sign of this bull market being over? I don't know. We won't know that. And that's the hard part. Like people want to, are you making a call? I'm not making a call. I'm just saying Scion closing, we should sit up and take notice. But I'd also add on the flip side, it seems like all the major investment banks are putting out headlines about how retail investors should sell right now. Like the tech run is over. Or even the Economist magazine with a skier upside down in the snow with a chart on it of downward arrows. So there's both out there. You don't typically see those type of magazine covers at tops or the headlines that we've seen out of, investment banks talking about how, the correction's upon us. We need to be careful. Retail should be selling. That's not typically the narrative you see out there. Like Wells Fargo says it's time to take tech profits off the table. You typically don't see that type of narrative or headline out there at the top.
I agree.
Or we got a headline out there. We've never been so sure of an imminent financial crash. Industry leaders across all sectors come together to say these signs of U.S. economic meltdown are undeniable. And that's in the
undeniable, bro.
Undeniable. And that's from November 2nd. So really that's how it works. All these headlines telling people, I've never seen it work that way. So it's interesting. On the one hand, you have a bear shop closing up, and on the other hand, you got media saying retail should sell. We'll see.
Bitcoin's going down.
Yeah, Bitcoin got hit.
Below.
What do you think about crypto? What do you think about crypto?
It stinks.
Not literally, just figuratively.
Yeah, I own crypto and it's going up right now. I don't want to own it. No,
all of them. Right?
It's donezo. Maybe forever.
Forever?
No, probably. Not.
we are in bear market territory since people like to use minus 20% as bear market.
There you
go. Bitcoin's down 20% since October.
Broken and traded trend from last August.
Below a 200-day, below prior highs. Not a great look.
I wouldn't be long.
Yeah, I think it's hands off for now. And I do think we're at an interesting spot, both stocks and crypto, where like you're in that in between, right? You can be, the long-term uptrend for equities is still intact.
Yeah.
You have a short-term counter trend move with all sorts of weakness that already happened underneath the surface. It's also very hard to get short right here. Like you got the VIX above 20 and you're going to get short then. That's too late. So it's this in-between, this weird in-between spot where, believe it or not, these corrections within uptrends are perfectly normal, right? We get 3% dips per year. And this would be our fourth one since the 20% pullback. Would you consider, let me ask you this, would you consider the correction from February to April 2025 20%?
Yeah, is it intraday? Isn't it technically 20%?
Yeah, intraday.
Yeah. I was looking at that earlier this week.
So we've had three. Do we get a 5% pullback? Do we get more weakness? I think it all depends on where we close today. I do think Friday closing prices are important. And if we can't hold last week's lows, that would be, you could see that we're having a 5% pullback, and that's just normal. That's a normal part of markets, but crypto is another world. I know altcoins have gotten hammered. The big boys, Bitcoin, Ethereum, Ripple, have been weak, even on a relative basis, huge opportunity cost.
Yeah, Ripple, not too high. Solana looks pretty rough. Luckily, head back down to the bottom of this range, 124.
Well, I think at this time, I want to highlight the supporter of this podcast, the Adaptive Select ETF listed on the New York Stock Exchange under ticker ADPV, which helps investors access two of the most prevalent factors in markets, momentum and relative strength. Using proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. Investing involves risk, including possible loss of principal. ADPV is distributed by Quasar Distributors, LLC. Where do you want to take us next, Ian? We want to stay on equities? We want to talk fixed income, commodities, dollar?
Fixed income. I guess it's been kind of flat. Well, someone told me TLT had been getting hit. Yeah, look at that. Well, rates went straight up since they cut rates. How about that?
Yeah. It's almost like the bond market knows better than Jerry.
Still below 200 day on 30-year. So maybe just retesting that. I don't know. We'll see.
I think right now, fixed income, you've got kind of a mixed bag. You've got, on the one hand, you had convertibles break down this week. On the other hand, you've got emerging market bonds doing just fine. That's not risk off. You got junk bonds trying to hold it together, kind of also at an important level.
Yeah.
For something like JNK, got to hold this 200-day and the $96 level on JNK. And we've seen triple C credit spreads rise since, when you talk about underneath the surface, triple C credit spreads have been rising since September. So surprising, shocking, triple C credit spreads tightening, lower liquidity, weakness underneath the surface, a catch down this week. I think it's really important where we close today. I do.
I agree.
All right. What else, Ian, before we wrap this one up and get it off to Kevin for...
I don't know, anything going on overseas? I guess Brazil looks good. Argentina looks good again. It's kind of been consolidating lately, but the last couple of weeks, but still really nothing from China.
Spain, European financials.
Yeah, European financials look very good. Japan continues to look good. Maybe that's more of the currency hedge stuff, but there's a lot of Japanese ETFs that.
What about gold and gold miners? Where are you at on that?
Where am I on that? I don't know. It kind of feels it went up like GDXJ went up, felt the gap from, I guess we went up to 101, 102. Still in an uptrend. Relative charts, interesting.
It's not like a slam dunk, is it?
No.
You could see gold and gold miners moving higher. A lot. I'm guessing some of it will depend on what we do with what the market does with the trade weighted dollar here. DXY still below 100, still below a falling 200-day moving average. But if it breaks back above 100, you could see potentially a definite slowdown and consolidation in gold priced in dollars for sure.
Yeah. I could see the dollar, and it kind of looks like it might want to go.
It's a great thing about using price data. We can wait for next week for more information. Anything else, Ian, before we ask our listeners to give us a high ranking and share us out on their socials?
No, I think that's it.
All right. Kind of a short one this week, and that's okay. Did you get through your cherry Coke yet?
Close.
You're close? All right. Then it is time to wrap it up. We appreciate everybody listening once again this week. Give us a high ranking on your platform of choice and spread the word. It helps confirm that what we're putting out there is providing value to you. Appreciate it.
Have a great weekend, everyone.